Yes, people, a very, very happy into all of you. Thank you so much. So, guys, we started with a brand new topic in the last class, which was Introduction to Accounting Standards. So, let's do a very fast, quick recap of what we did in the last class, and then we'll start with the new topic for the day. So, last class, we understood the meaning of gap. What is gap, people? Wonderful, wonderful. What is gap அப்படின்னா generally accepted accounting principles. What is GST அப்படின்னா goods and service tax, you will say. Oh my god, that is abbreviation. I'm asking meaning. What is the meaning of gap? It's a framework. It's an accounting framework within which all the countries are supposed to develop their accounting standards. It's a boundary line that they have drawn. Within this boundary line, each country is given freedom to draft your own accounting standards. Now, the question is, what if this framework is not there? If this framework is not there, every country will try to create the accounting standard which is very much convenient to them, to an extent that the financial statement, if you take for two different countries, having two different extreme sets of accounting standard, if you take up appadina, you will not be able to compare them. You will not be able to compare them. So to ensure a good amount of comparability, a decent amount of comparability within the country and at the global level, so experts all over the world, they felt that at least we should have a outer line framework within which the accounting standard needs to be developed. These expert people cannot tell you to do this in particular way. They cannot tell you exact accounting rules or standards to be followed. The reason being, every country has got their own economic situation, legal situation, and business situations and conditions. So you cannot dictate what exactly the standard should be. So countries were given the freedom to choose their own accounting standards, but that accounting standard, what they draft, should be very well within the framework of the gap. So for example, the accounting standard that is built by India, by ICAI, let's take accounting standard 2, which talks about valuation of inventories, inventory valuation. In that, they say that inventory should be valued at cost or NRV, whichever is less. So this accounting standard, what they formulated, what is the basis of this? What concept is hidden inside this? Sorry? Prudence concept. Prudence concept has been taken into consideration. So when I did CA foundation with you, that time I told you the logic behind why inventory is valued at cost or NRV, whichever is lower, because they wanted to satisfy, they wanted to be in alignment with prudence concept. Okay, accepted. Next, if you remember, depreciation chapter. In that we said that whatever fixed asset you buy, you cannot record the entire fixed asset to the P&L of the same year of purchase. You have to take it to the balance sheet, to the asset account. Over the period of its useful life, you are supposed to charge depreciation. So now that accounting standard, so that depreciation concept is related to accounting standard 10. So this AS10, this concept is drafted, Harini, considering what concept? Matching concept. Since the machine is going to be used for 10 years, since the benefit from that machine is being derived for 10 years, the corresponding expenses needs to be allocated for 10 years. So this gap is giving you, there are certain concepts and certain fundamental assumptions, basis of which the accounting standards has to be developed by each and every countries. Got it, not got it? So gap is basically a accounting framework within which the countries are supposed to develop their own accounting standards, which consist of going concern. So in that gap, what and all be considered? Going concern concept, consistency concept, accrual concept, prudence, materiality, matching concept. All these are considered. Now, India is following what gap? India is following Indian gap. So they've taken gap as a base. With that, they've given little bit tadka of what? Indian flavor. So Indian tadka. Pizza is originated from, is it Italy or is it Italy? I don't know what it is. Italy. Yeah, Italy? No. In that, India, Domino's, if you go, what flavor have they added? Indian flavor, which suits our taste buds. Accordingly, we have modified. So we follow Indian gap. Now here in India, we have two types of accounting standard. One is a regular accounting standard. Second is Int AS. This has been something which is formulated by ICAI and notified by MCA. Now this I have to elaborate in today's discussion, about what is the role of ICA in this and what is the role of MCA in this. USA does not follow the gap that has been suggested by expert accounting bodies. They have their own gap called as US gap. UK has got UK gap. UK gap and IFRS is almost same. Then there's something called as Japanese gaps. Everybody has modified the gap to the extent what suits their economy the best. Now, this gap is done by why this gap concept is coming into picture? Because they wanted to make the financial statement comparable. They wanted to ensure comparability of the financial statement. You take any financial statement within the country or two different countries, to a major extent, the comparability of the financial statement should be possible. Then, to understand, you have to frame the financial statement in such a way that the person who's reading the financial statement to a very good extent should try to understand what is the financial statement, in what manner it has been prepared. So to ensure understandability, the gap is being implemented. Next, somebody said something. Transparency. We want the all accounting data to be displayed in a transparent manner. So to ensure transparency, gap was implemented. Next, to ensure comparability, understandability, transparency, reliability. We wanted the financial statement that is prepared. No, it should be reliable. We should, as an investor, I want that financial statement which I can rely upon. And that financial statement that you give to me should be relevant to my discussion, should be relevant to my thought process. It should be relevant to my decision making. So relevance was important. So to ensure all of these are there in the financial statement, so experts all over the world came together to come out with the concept of a framework called as gap. Any difficulty? No. Then we studied the evolution of international accounting standards. So we said that, or we agreed that, or we discussed that in 1929, the world faced Great Depression. A huge recession had come into picture, because of which the companies were facing huge amount of losses. Stock market started crashing. Therefore, in order to revive those companies, to show them they're doing well, in order to show that they are in profit, what they started doing is they started window dressing accounts. They started manipulating accounts. Why? Because we didn't have a rigid accounting standards or accounting rules or accounting principles in place. So people did what they felt like doing. Therefore, after 1929, worldwide, everybody, all the countries felt that there's a need of a strong accounting standard to be implemented across the world. So therefore, they formulated one committee called as International Accounting Standard Committee, whose responsibility was to develop international accounting standards. This committee was formed in 1973. It was formed in 1973. From 1973 to 2001, this committee has issued in total 41 international accounting standards. However, in 2001, when globalization was at its peak, worldwide people felt that this committee and the standards what they've developed is no more relevant to that particular year of requirement. In that particular era, what requirement was there? To that requirement, these standards and these committee were not living up to that standards and level. So it is very important for us to scrap this and come out with a new board with fresh new thoughts and fresh new energetic people who understand the current challenges in the economy and give an accounting solution to it. So therefore, in 2001, they scrapped International Accounting Standard Committee and they created a new board, rather a board called as International Accounting Standard Board. So this accounting standard board was more independent and more technically focused on developing the accounting standards in a more robust way. So now IASB was responsible for what? IASB was responsible for what? To check whether this IAS what is drafted is relevant or irrelevant. If it is totally irrelevant, scrap it and replace it with a new new standard called as IFRS. Wherever they felt that this IAS is to an extent relevant by doing small changes or slight changes, then they have made slight changes, and along with this IFRS, the IAS also continued. By doing this, what did we achieve? The financial reporting that was done under IAS compared to IFRS became the reporting that is done under IFRS became more stronger when compared with IAS. And therefore, the financial reporting at the global level become very rigid. Not just that, even in the event of raising funds capital across the globe, this financial statement that is prepared on the basis of IFRS facilitated raising of the funds in a very faster and easier manner. And therefore, any company who wanted to list its stocks across multiple countries, for them, having financial reporting under IFRS system made it easier to do the listing process. So therefore, IFRS was a universal accounting language that is adopted by several countries. The headquarters of IASB is located in UK. So UK and all the European unions very happily, very peacefully, they adopted IFRS as it is. But when it came to India, we didn't feel like adopting it. We felt like let's converge. Same way, USA was the person who neither wanted to adopt nor converge. So they went in altogether a different route. So some countries blindly adopted the IFRS as it is. Some countries has done full adoption of IFRS. United Kingdom, Germany, France, Australia, Canada, South Africa, Brazil, etc. But there were some countries who felt that this IFRS may not suit our economic conditions, business conditions, and legal conditions. So they modified it with minor changes here and there, and they converged it. And India, this kind of convergence is called as INT-AS. So India, Japan, China, South Korea adopted not adoption model, but they adopted convergence model. And there's one country who did not adopt IFRS at all, is United States of America. So IASC stands for International Accounting Standard Committee, which was operating during this period, who had issued 41 international accounting standards, which today, to some extent, few IAS are valid, but most of them are scrapped and replaced with IFRS. IFRS is a substitution of IAS. This IFRS has been issued by IASB, which stands for International Accounting Standard Board. So this got into the picture in 2001 and onwards. And so far, how much IFRS they have issued? 17 major IFRS, and still they are working on it for expansion purpose. So this is what we have discussed in the last class. Am I right? Okay. Is this recap good enough? Can I go to the next topic? Fine. Super. Now let's have a quick discussion on the type of accounting standards that is applicable in India. So in India, at the local level, the standard that we deal with is called as accounting standard. And the accounting standard that we deal at the global level is called as Indian Accounting Standard. In short, if I have to tell, this is our India's local languages. Whatever language you want, you can assume. All the local language that we speak in India is referred to as accounting standard. Whereas Ind-AS is nothing but foreign language, which is called as English. But it is not ENGLISH, it is INGLISH. Why it is INGLISH? Because IFRS stands for ENGLISH. We did not follow adoption strategy. We followed convergence strategy. So what we did in this ENGLISH, E alone we replaced with I. I for India. Rest all we adopted as it is, which means what? 90% of IFRS we have adopted as it is. 10% changes we have done here and there. Hence this becomes what model? Convergence model. Okay, not okay. So let me start discussion on accounting standard. Are you all ready, online people? No response.
Yes, sir.
Fantastic, fantastic. I want all of you to keep your video switched on throughout. Nobody is going to switch off the video. Okay, offline people, are you all ready? Can we start?
Yes.
Fantastic. Meaning of accounting standard. Sir, accounting standard is a set of written policy document. It's a written policy document. Correct, no? To go and Google, I want accounting standard. It's a written document that you will come across, which states the various accounting policies that a business entity has to follow while accounting. So it's a written policy document. Any problem in this? Which is formulated by Accounting Standard Board. So this accounting standard, who is drafting, who's creating it? ICAI. But ICAI is a huge organization. In ICAI, they've created one particular board called as Accounting Standard Board, who is responsible to formulate the accounting standard. Like for example, all of you have come across this board called as BOS. What is BOS? Board of Studies. Board of Studies. What is the roles and responsibility of Board of Studies? You tell me. ICL Board of Studies, Rika. What is their roles and responsibility? They have to run the CA course in a very structured manner. How many levels should be there? In each level, what should be the group? What should be the subject? What should be the syllabus of the subject? When exam should happen? When it should not happen? What should be the passing criteria? How the correction needs to happen? Everything is been decided by Board of Studies. What is the concept of MTP, RTP, when we should release, etc., etc. All the decision making with regard to our examination and studies is been taken by BOS. So BOS is comprising of group of multiple CAs who sit together and formulate strategies for us. In the same manner, ICA felt that we should have an independent board called as Accounting Standard Board, comprising of multiple chart accountants who will sit and do the brainstorming on the need of implementing the accounting standard, formulating and implementing the accounting standard. So this accounting standard has been drafted by a board called as Accounting Standard Board, and this board is a part of your ICAI. It is constituted under ICAI. Under what framework? The framework that you have to follow is GAP framework. Everything that you do has to be in compliance with GAP framework. Can you deviate from GAP? Can ASB say, no, while drafting AS2, I will not consider prudence concept, I will not consider matching concept? Can they say that? No. We have to follow the GAP framework. And this has been finally issued by ICAI. It has been issued by ICAI. Now, this standard, which has been issued by ICAI, is applicable for two types of entities. Those two types of entities are called as corporate entities and non-corporate entities. Which entities? Corporate entities and non-corporate entities. Corporate entities, in simple language, if I say it, is companies. Non-corporate means what? Other than companies. Can you give example of non-corporates? Sole proprietorship concern, partnership concern, LLP, etc. These are non-corporates. So this accounting standard, which is being developed by Accounting Standard Board, it is being further issued by whom? ICAI. So Accounting Standard Board will formulate this accounting standard, give it to ICAI. ICAI will issue this accounting standards. So this accounting standard has to be followed by which people? Two kind of people. One is corporate people. Second is non-corporate people. Correct? But if you're a corporate, if you're a company, apnina, institute alone, if they issue, it is not sufficient. Apart from institute, Ministry of Corporate Affairs has to notify it, because all the corporates are to be governed as per MCA. Yes or no? MCA stands for Ministry of Corporate Affairs. Ministry of Corporate Affairs, which means accounting standard is being developed by whom? Accounting standard. Let me talk about first non-corporates. Non-corporates. Accounting standard is developed by whom? Accounting Standard Board. Once they develop it, there's a huge process which I'll discuss today, but in short, I'm discussing as of now. This is being issued by whom? ICAI. And whatever ICAI is issuing it, it has to be followed by the non-corporates. Non-corporates needs to follow. Any problem? However, if you're a corporate, apnina, for corporates, who will issue or who will formulate the accounting standard? Still Accounting Standard Board only. And who will issue it? ICAI will issue. But apart from this, MCA has to notify. MCA has to notify. Only then it is to be followed by the corporates has to follow. Okay, not okay. So in this process, there are a lot of masala in between, which I'll discuss in the next few minutes. Overall outline formulation, is it understandable? Okay. Let me read it one more time for all of you. What is the meaning of accounting standard? Accounting standard is a set of return policy document formulated by Accounting Standard Board, constituted under ICAI. Under what framework? Under GAP framework, and issued by whom? ICAI, and which has to be followed by corporates after MCA's notification, and non-corporates can directly follow. No need for any MCA's notification. Got it? Not got it? Now these non-corporates earlier were classified as level 1, level 2, level 3, level 4 entities. However, last year in 2025, there was an amendment to it, and this level is now being replaced with terms like this. Level 1 entities are now referred to as large entity. Level 2 is referred to as medium entity. Level 3 is referred to as small entity. Level 4 is referred to as micro entity, which is called as shortly and sweetly MSMEs, micro, small, medium. So it is no longer level. It has been replaced with a new terminology. So about this, I'll discuss in depth in your chapter number 3, which is applicability of accounting standard. In that, I'll discuss about replacement of level 1, 2, 3, 4 with large, micro, small, medium entities. Okay, not okay? Okay. Accounting standards are generally considered rule-based and not principle-based, whereas your IFRS is principle-based. What is the meaning of principle-based? They will give you one accounting standard with multiple options. You have to choose the option which best suits you. Correct? But India, ICI said that if you give so many options, one accounting 4 option கொடுத்தீனா, for one accounting if you give 4 option means our people பூந்து விளையாடுவாங்க அதுல. So don't give them too much options. Too much of cook spoils the broth. Too much of anything is good for nothing. Too much of option is also dangerous. Yeah, but each people will follow one option. And by following one different option, enama sound varudhu? Monisha, very good. So if these people are given 4 options and on that basis they prepare financial statement, for me in India, comparability is not possible. So wide options is been restricted in accounting standards. Got it, not got it? Hence we call this as rule based. Here also flexibility is there. I'm not saying flexibility is not there. Flexibility is there. Option is there. But options are very limited. Whereas in IFRS, option is more wider. Got it, not got it? Okay. Before I discuss this, what I'm thinking is, I'll discuss with you how this accounting standard is implemented, how this accounting standard is issued. There is a process. That process I want to discuss with all of you. You can take parallelly your study mat, page 1.6, 1.7. Come to page 1.6, 1.7. This is my last year's book. Please check if your textbook has got same numbering or different numbering. Textbook is not there. Okay, those who have taken it, others can wait and enjoy. Is it the same thing? Chalo, great. I'm just reading this. Don't worry, I'll explain everything again. The Institute of Chartered Accountant of India, shortly and sweetly called as ICAI, being a premier accounting body in the country. What is the meaning of premier accounting body? Why do we call ICAI as premier accounting body? The amount of trust the Indian government has on ICAI with regard to accounting standard, that much of trust they have not exhibited on any other institute. So we are considered as number 1 leader in the field of accounting standards. Hence we are called as premier accounting body. Being a premier accounting body in the country, took upon itself the leadership role by constituting the Accounting Standard Board in 1977. So they said that in India, it is very important for us to have accounting rules and regulations, accounting standards. So don't worry, we are there. We will come out with accounting standards. We are proficient people. We are capable to understand the accounting problems and we are capable to give the solution to it. And for that reason, in 1977, they constituted one board called as Accounting Standard Board, ASB, which is responsible to formulate accounting standard. The ICAI has taken significant initiatives for issuing accounting standard to ensure that the standard setting process is fully consultative and transparent. Now, this you will understand in some time. They're telling that when ICAI took the responsibility to formulate accounting standard, they have not decided things on their own, taking advantage that, oh no, only I know everything in the world, so I am the ultimate decider of accounting standard. Like that, they have not done. They have consulted with regard to this accounting standard with n number of external people. Who are they? We'll discuss now. And they try to keep this entire process of implementing accounting standard very, very transparent. How transparency is ensured, I'll discuss now. The ASB considered the International Accounting Standard, which is IAS, or IFRS as a base while framing accounting standards in India. Whether they were formulating accounting standard or whether they were formulating Ind AS. While formulating accounting standard before 2001, what was there as a benchmark to compare? IAS. So they took IAS into consideration. They referred, okay, what is there in IAS? In that, whatever is suitable to us. What happened? Camera went off. Huh? Oh, he went to sleep mode. Now, okay. So basically, when we were formulating accounting standards, we were referring a document called as International Accounting Standard to see what and all of IAS can be implemented in India. So what and all suits our economy, our legal conditions, our business condition, we copy pasted that. And wherever it is not suitable, we came out with a different solution for that problem. So the ASB considered IAS and IFRS while framing accounting standard in India and try to integrate them in the light of applicable law. So we took IAS, we took IFRS. With that, we also applied our law, our custom, our usage, our business environment, everything we adopted. I mean, we saw that and accordingly framed the accounting standards. Now, this ASB consists of representatives of multiple industry. This ASB is primarily forming a part of your CS. ASB ku yaar irukanga? CS irukanga. But ASB alone will not take this decision. They will consult with whom? Various industry leads, various associations such as CII, FICCIs, various kind of regulators such as SEBI. Then what and all? RBI. So like that, many people, academicians, government departments, all of them were consulted before the accounting standard has been released. Right? Although ASB is a body constituted by the Council of ICI, it is an independent body in the formulation of accounting standard. Though ASB is coming as a part of ICI, it is not being influenced by anybody else. They are independent body to make a sole decision with regard to what accounting standard they want to propose to the people. Now, NFRA comes into picture. Now, this part alone, I want to keep it pending. Let me go back to my note. ASB was formed in which financial year? Not which year rather, not financially, which year? 1977, which is constituted under ICAI. So we call this as ASB of ICAI. The responsibility of this is to draft the accounting standard or Indian accounting standards. How do they draft it? Sir, first of all, these accounting standard board will try to identify the problematic areas where the problem is happening. For example, now cryptocurrencies are coming. So now the latest problem is how do we account for cryptocurrencies? Like that, imagine in 1970s, 80s, 90s, we had a new challenges. So they first try to identify what is the problem that the business entities are facing while accounting. So they took that problem and they discussed what solution can be given for this problem, how the accounting needs to be done. For that, they gave a suggestion. So first step was to identify the areas which requires accounting standard. Come here. Step one is identification of areas. Identification of broad areas by ASB for formulation of accounting standard. What is the current problem that is being faced by the business entities for accounting? So today's problem is how do we account for cryptocurrencies? That is today's problem. Like that, in the respective period, whatever was their problem, for that they came out with solution. How they came out with solution? This standard, accounting standard, they identified the areas of the problem and then they formulated something called as study group. So what is the next step? Constitution of study groups. So here, this ASB had come out with small study groups where each of this group are given the problem to find out the solution. Constitution of study group by ASB to consider specific project and to prepare the preliminary draft for the proposed accounting standard. So their responsibility, the study group ka responsibility was to give a solution for this accounting problem. So what way they gave solution? So now let's suppose the problem was in the valuation of inventory. So they came out with the solution. In that, they have to draft that this accounting standard, which is called as preliminary draft, initial draft, will consist of what? First, it will consist of the objective of this accounting standard. Adadi, if AS2 is coming into picture, what is the objective of this? What is the problem that is trying to solve? So you have to quote objective for every accounting standard. I'll show you one random accounting standard. See here. This is accounting standard 9, which talks about revenue recognition. What does it say? We are not sure when a sale has to be recorded or when a service income should be booked. Problem or not problem? In the very first class, I told you there's a problem. I'm a chocolate seller. I'm a chocolate manufacturer and seller. I didn't know when I should record the sale. Should I record at the time of dispatch? Should I record the revenue at the time of transit? Should I record it when the goods were delivered to the, what do you call, it was delivered to the transport office of the customer? Or should I record this at the place when the customer received the goods? At that point, should I record, or should I record at the time of receipt of money? We didn't have a clarity. So that was the problem. That was the area which they identified. And now the solution for this is given where in accounting standard 9. So in AS 9, they're trying to say that the objective of this standard is to provide how the entity must record revenue. Got it, not got it? So they have to specify the objective of the accounting standard. Okay, sir. Next, what are they supposed to specify? They're supposed to specify what is the scope covered in this accounting standard. Now, for example, revenue means what? Revenue means income. Now, are we trying to give solution for all the income? The answer is no. So, for example, let's suppose I'm into construction business. I undertake construction contract. Now, my problem is how should I record my revenue? As a person who's into construction business, how the hell am I supposed to record my income? Should I follow as per AS 9? The answer is no. For that, there's a separate AS called as accounting standard 7. So here they'll mention that these are the points which is covered in the scope and these are the points which is excluded. So construction contracts, the revenue that is to be earned from the construction contract is out of scope of AS 9 because it is coming under the scope of AS 7. So first, every standard should specify what is your objective of this accounting standard. And second, they have to mention that what is covered in this, what is not covered in this, what scope is covered and what scope is not covered. That they have to mention, which is scope. Then they're supposed to give definition or the meaning for each and every term. Now here, what does revenue mean? Apart from scope, applies, not applies, you have to state various meaning. What is the meaning of revenue? By revenue, what do you mean? By trade discount, what do you mean? By cash discount, what do you mean? Like that, every standard will have some definition, standard definition, meaning or the other. So objective should be there, scope should be there, definitions and meanings of the terms should be there. And all of this should give you a clarity on 4 aspects. Every accounting standard, people, every accounting standard that is coming out is going to give you a solution to 4 aspects. The 4 aspects are, the first one being called as recognition aspect. Next is measurement aspect. I want all of you to write it. Measurement aspect. Third is presentation aspect. Presentation, presentation aspect. And the fourth one is disclosure aspect. All the accounting standards majorly has got these 4 aspects considered while formulating accounting standard. Sir, what is the meaning of recognition aspect? Every standard will tell you, or most of the standards will tell you that when the journal entry should be passed. A lot of time we have a confusion, no? At what point of time the journal entry should be passed? So AS 9 will tell you that at what particular incident or event upon which or upon happening of which the journal entry should be passed. When journal entry should be passed and how the journal entry should be passed. How journal entry is or should be passed. Basically, they will tell you what is the journal entry that you have to record. So recognition aspect means what? When a journal entry needs to be recognized in the books of accounts. Next, measurement aspect deals with what? What means what? What should be the amount of transaction? When the transaction is recorded, what should be the amount of it? What should be the amount? What should be the amount? When I'm recording revenue, how much should I record it? Should I record 1 lakh, 1.5 lakh, 2 lakh? What is the amount that you have to record? Third is presentation aspect. Let me do one thing. Let me give you one example based on which I'll give you a clarity. Example is, there is a particular business entity who has to collect from debtor rupees 1 lakh. From this debtor, we have to collect rupees 1 lakh, or let's say this is debtor is basically a group of multiple customers. From multiple customers all put together, you're supposed to collect 1 lakh. In that, there's one particular customer whose case is being fought in the court of laws for bankruptcy. That is, one of our customer is having a court case pending in the court where he's being or he's about to be declared as bankrupt. Now the question is, in such a scenario where my customer is about to be declared bankrupt, what thought process will be there in your mind? Possibility whether the money will be recovered or not. I sold my goods to this customer. I was expecting a money. Now I'm getting information that there's a bankruptcy, insolvency case running against that particular gentleman. Now the doubt should come to your mind that whether I'll recover this money or not. Correct? Now, the question that comes here is that out of this 1 lakh, around 10,000 rupees is the money that I'm supposed to collect from this gentleman who's about to be declared insolvent. So now, should I create provision or not? The court has not declared him insolvent yet. The court has not declared him insolvent yet. But the status of the case so far looks like very soon he'll be declared as bankrupt. With the court proceeding, what is the status of case, whether we are going to win or lose, some idea will get it. So based on that, there are high chances that he might lose. And if he loses, we will not get our money. But judgment is not come. If judgment is not come, this we can't take it as bad debt. Because in judgment, the court might tell that, okay, out of this 10,000, give 6,000 to Pratik. Anything can happen. So either I might receive full 10,000 or I may receive part. How much money will come, how much money will not come, we have no idea. But prudence concept says what? Provide for anticipated losses. You have a substantial reason to believe that this money may or may not come. On the basis of prudence, you can record a journal entry for provision for doubtful debt. Now the question is, should I create provision or not? Should I create provision or not? Should I pass the entry for provision or not? Now this decision, okay, record up to recognition aspect, which is mentioned in accounting standard 29. Got it? Whether should I record the provision entry or not, explanation to that is called as recognition aspect. Got it, not got it? When to record? When journal entry should be recorded? And once you decide to record the entry, how the journal entry needs to be passed, what should be debited and what should be credited. Both of these points are discussed in recognition aspect. Got it, not got it? Now the question is, sir, you said journal entry to record. Now the journal entry what I record is what? P&L account debit to provision for doubtful debt. This entry is coming from recognition aspect. But now still the question mark is there. What amount should I record? Should I create provision for the entire 10,000 or 4,000 or 6,000? What should be the amount? That clarification is being given by measurement aspect. So measurement aspect will give us a clarity that how much of the amount should be recorded. How much of the amount should be recorded? Okay, not okay. This is measurement aspect. Third comes presentation aspect. Now that you have created provision for doubtful debt, now that you have credited provision for doubtful debt, this ledger is going to have what balance? This will have credit balance. This will have credit balance. And all the ledger having credit balance will travel where in balance sheet? It will go to liability side of balance sheet. It goes where? Liability side of balance sheet. This point at least 1,000 times you've discussed in 11th, 12th and foundation. Now the flow should come just like that. Now all the ledger having credit balance will go to the liability side of balance sheet. So in the balance sheet, under liability side, if we record provision for doubtful debt, let's say 6,000 rupees. Is this presentation right or wrong? Or what should be the presentation? That aspect is being given by or covered by AS 29 under presentation aspect. So presentation aspect means what? The accounting treatment that you have done. How should I present this in the financial statement? In the P&L and balance sheet, how to present? So what did accounting standard 29 say? Look boss, this PDD, though it is credit balance, but recording this on liability side does not make sense. Why? Because liability means what? Anything that we have to pay to anyone in future is liability. This 6,000 rupees, are we going to pay to anybody in future? No. Hence, having this on liability side will not make sense. So what do you do? From the debtor of 1 lakh rupees, you minus the 6,000. All of you know that in balance sheet, liabilities is called as left hand side, asset is called as right hand side. Like in mathematics, how we shift the data from left hand side to right hand side, we can shift the data from liability side to asset side. In that case, plus will become minus, minus will become plus. So therefore, the 6,000, when it goes to the other side, plus 6,000 now becomes minus 6,000, and hence minus PDD of 6,000 presentation is being suggested by accounting standard 29. So what aspect are they trying to cover? Presentation aspect. So presentation means what? This data, how it is presented in the financial statement is what? Is presentation aspect. Got it, not got it? Then AS will also suggest you the disclosure aspect. Disclosure aspect means what? Apart from recording the journal entry, apart from presenting this in the financial statement, is there any information that should be given in the notes to accounts? What is notes to accounts? This is a place where we give elaborate explanation for certain data. For certain data, we give elaborate information. For certain conditions, situations, problems, we give elaborate explanation to this. So if any information is to be given in notes to accounts, this is called as what aspect? Disclosure aspect. So disclosure aspect means a particular AS will tell you that what information should be disclosed in the notes to accounts. Notes to accounts. So if any AS tells you to disclose this in so and so places, Aptina, where will you disclose this? Under notes to accounts. Sir, will all the AS have the information on all the 4 aspects? The answer is no. Some AS will give you solution for all the 4 aspects. Some AS will be only disclosure based or presentation based AS only. So as and when we do respective accounting standards, we will understand that this particular AS is dealing with what and all aspects. Got it, not got it? So recognition aspect means that how should I record journal entry? Measurement aspect means what? The entry what you're recording, for that what should be the amount? Presentation aspect means what? This data, how I should present in the P&L or balance sheet. And fourth is, is there any information apart from entries, is there any information that I have to disclose in the financial statement so that when the user of financial statement read that, they get the better clarity of this particular business or financial statement. So that is called as disclosure aspect. Okay, not okay? So if you come back here, the draft normally includes objective of the accounting standard, scope of the standard, definition of the terms used in that standard, recognition principle, measurement aspect, wherever applicable, presentation and disclosure. Got it, not got it? So 4 aspects they're dealing with: recognition aspect, measurement aspect, presentation aspect, and disclosure aspect. So once you are ready with this, once the ASB is ready with this, this is called as preliminary draft. What is it called as? PD, preliminary draft. So consideration for the preliminary draft prepared by the study group of ASB and revision, if any, of the draft on the basis of deliberation. So once this PD is being ready, this PD will now be handed over to different people. We will take reviews from them, and wherever required, we will do necessary changes. Got it, not got it? So coming back, first ASB of ICI will draft, which draft? Preliminary draft. They will draft a preliminary draft of accounting standard after identifying the need or the areas where the solution is required for accounting. This is been done by the study group. So this ASB will constitute various study groups who will prepare a preliminary draft. Then this PD is being circulated or handed over to the council members of ICAI. So you have something called as regional council member. Council member means what? These are chart accountants who are left hand or the right hand of the president and the vice president of ICAI. So they will try to read the accounting standard and understand the accounting standard, what they've prepared is good, not good. Or if there is any suggestion to be given for changes, then accordingly council will give suggestions. Not just that, you will not give this just to council members. Apart from giving this to council members, a copy of the PD you will hand over to the outside bodies, regulators such as MCA. You will give one PD copy to MCA, RBI, SEBI, CBDT, C&IG, Scope, and various other industry body, so that they will go through this accounting standard and check whether ICA has given a genuine solution to this or not. Now, all these regulators, industry bodies, ICA council members will give their own suggestions. They will give their own views. So these views, what will we do? We will ascertain those views. After ascertainment of the views of different bodies for the preliminary draft, thereafter you will make necessary changes in that and finally come out with ED called as exposure draft. Now the PD which has been prepared by the study group of ASB is handed over to council members of ICI and other outside bodies such as regulators and industry bodies. Who are coming under regulators? MCA, RBI, SEBI, CBDT, CNAG, Scope, etc. All of these people will give the inputs. Based on that inputs, we'll make necessary changes wherever required. And that document, that document which is prepared by the study group after making necessary changes is called as ED. ED stands for exposure draft. Now this ED will be handed over, will be released to public to ascertain the public comments. In public, who all will come? The practicing chart accountants. Practicing CA, are they a part of ASB? No. Are they a part of the council members? No. These are nowhere there, either in the first stage or second stage. But still, practicing CAs are those people who work very closely with all the business entities. More than them, nobody knows what is the actual problem that the entities are facing. So, in public, the practicing chart accountants and teachers like us who are having the subject matter of expertise, especially those people who deal with accounting standard and Ind AS, I'm talking from teacher perspective, they will also pour in their comments. Likewise, if there are anybody else, they'll be giving the comment on this exposure draft, and ASB will review the public comments and make modification and changes wherever required, and then they'll come out with one final accounting standard. Got it? Not got it? So what is the first step, people? First, the ASB will constitute one group called as study group. So what is the responsibility of the study group? To identify the area of problem which requires solution. So they will try to give solution. How do they give solution? They have to draft a document which consists of the objective of accounting standard, scope of accounting standard, various terms that is being mentioned in the accounting standard, covering how many aspects? 4 aspects. Is it necessary to cover all the 4 aspects? No. If that problem demands all the 4 aspects, you give solution for all the 4 aspects. If a problem is only for 2 aspects, then give solution for 2 aspects. But what are the 4 aspects? Recognition aspect, measurement aspect, presentation aspect, disclosure aspect. Okay. Once this is ready, you prepare a document called as preliminary draft. Then this preliminary draft is handed over to council members of ICI for their review and feedback. Not just them, you will hand over this also to outside bodies such as regulators and industry bodies who are comprising of MC, RBI, etc., etc. From these people, you will get comments, feedback, and do the necessary changes in the PD. Now this PD, which is coming after the changes, is called as ED. ED stands for exposure draft. Now this exposure draft has been released to public for public comments. Now public will give the comment. In public, who comes? Practicing CA, teacher CA, or anybody else will give their suggestion, and accordingly, the AS will be finalized. And this, after this finalization of this AS by Accounting Standard Board, they will hand over the final copy to ICA Council for its final approval. Thereafter, ICA will issue this to the business entities to be followed. So this accounting standard is officially issued. But there's one small process further here. If you are a non-corporate, whatever standard is issued by ICI, you have to follow that standard becomes legally applicable. In non-corporates, who all come? Partnership, sole proprietorship concerns, LLPs. For these entities, whatever AS is issued by ICI, that is something you have to follow. That is legally applicable on you. However, if you are a corporate apprina, ICI issue done by ICI is not sufficient. Apart from ICI, there's one more person responsible who will intervene, which is MCA. So for corporates, MCA has to notify this AS, only then it is applicable on corporates. And MCA will not give the notification unless and until they approve or get consultation from NFRA. So NFRA will give input wherever applicable. NFRA will give input wherever applicable. So MCA will consult with NFRA. Once MCA receives or reviews input provided by NFRA, then MCA will notify this under where? Companies rules. Companies rules is a part of your Companies Act 2013, and thereafter only the standard becomes legally applicable for corporates. For corporates, got it? Not got it? Now NFRA I meant to discuss, MCA I meant to discuss. I have discussed how this accounting standard is being issued to the various business entities. Got it? Not got it? Is this point clear or not clear? Now note, point to be noted. AS are developed by ASB of ICI. AS can never override the country's law and its local regulations. Always law and the local regulation is above everything. Under that only what comes? Accounting standard. So you cannot come out with any accounting standard which will override, which will cross the law of the country or the local regulations of that particular locality. So it is very important that the standard that you formulate should be very well within our Indian laws and Indian regulations. As of now, total 27 accounting standard is notified as per Companies Accounting Standard Rule 2021. Now, if you want to ask me, sir, this MCA gave notification. No, MCA gave this notification. Where can I go and find the notification? This notification is given under Companies Accounting Standard Rule 2021. Sir, 2021 means 4 years ago only. Is accounting standard there since 2021 only? No, it is there since 1977. So prior to this, where was this notified? So MCA notified this under Companies Accounting Standard Rule 2006. 2006 Companies Rule was a part of Companies Act 1956. All of you know that before Companies Act 2013, we had something called as Companies Act 1956. So in the old act, the old rule book was 2006 rule book. Then in 2013, the act got changed. Now they came out with a new rule book called as Companies Accounting Standard Rule 2021. So now latest accounting standard, if you want to go and refer, where will you refer? Under Companies Accounting Standard Rule 2021. How many AS is notified? 27 AS is notified. Now regarding this, I have to give a lot of information. In total, there were 32 accounting standard. From 32, how it became 27, I meant to discuss with you. Okay, not okay. If this structure is clear, can I go a little bit back? Now I'll come back. So this we discussed meaning of AS. Now, what is the role of Accounting Standard Board of ICI? What is the function of ASB? The function of ASB is to develop and formulate accounting standard. This ASB was formulated in which year? 1977. So formation of ASB by ICI was done in the year 1977. What is their primary role? The role is to draft and formulate. That is draft you say, develop you say, formulate you say, whatever you want you say. What are they formulating? Accounting standards for India. Can they formulate this for UK? USA? No. It is done for India. This ASB comprises of what? This ASB will comprise of, ASB engages with. Now ASB board will comprise of CAs only. But this ASB board cannot make sole decisions. So whatever accounting standard PD they are preparing, that PD, they have to share it with the industry bodies such as CII, FICCI, regulators, academicians, professionals, etc. So we said no, PD will be shared with council members of ICI. They will share with all other outside people. Then they will share it with whom? Public. In public, who comes? Practicing CAs, then teachers, academicians. To all of them, they have to share and discuss and get the opinion. Exposure draft. What is exposure draft? Exposure draft is a accounting standard which is being issued to public for public comments. PD is given to all these council members and the regulators, industry bodies for their feedback. That is PD. What is ED? PD with changes. The changes is coming from whom? I say council members and regulators and industry bodies. From there we get the input and then we add that input to this PD. So PD plus amendment becomes ED. Now this ED goes where? To public for public commenting. Now after public give this comment, ICA will implement that. That is ASB will implement that and get a final approval from ICI and issue. Then they will issue. So issues, that is ASB will issue exposure draft for Public comments. Recommendation. Submits finalized AS to ICA Council. So once you get exposure draft, once you get ED, that is public comments, the changes you will make wherever required, and the finalized copy of the accounting standard is being handed over to ICA Council, who then will recommend MCA for notifying, who will hand over this to MCA for notification purpose. And this is only for companies, which is corporates. Note, for making accounting standard applicable on non-corporates, such as sole proprietorship concern, partnership concern, LLP, trust, society, etc., MCA notification is not required, as it is implemented by ICI itself. So if you're a non-corporate apnina, you don't need any third person to interfere and give notification. ICA itself can implement. So whatever ICA says, it is applicable on non-corporates. In other words, for non-corporates or non-corporate entities are expected to follow ICI issued AS based on whether you are level 1, level 2, level 3, level 4 classification. So ICA is told that if you're a non-corporate apnina, I will put all of you under 4 category. How many category? 4 category. Level 1, level 2, level 3, level 4. Now in the previous year, this level 1, 2, 3, 4 is changed to large, micro, small, medium. So level 1 is large. What is level 2? Medium. Level 3? Small. Level 4? Micro. There is a change in this. Okay, not okay. I gave one single note, hence I did not change it here. So one common note I gave in the above, no? Same thing will be applied wherever you come across the word level. Level is replaced by large and MSME. Now, once the ASB is formulating the accounting standard, will they sit and watch the show? Will they keep quiet? No. What they will do? They will continuously review the accounting standard to check whether we have to give any changes, solution, amendment or not. So on time to time basis, the accounting standards will be amended. It doesn't happen on every year basis, but wherever required, once in a decade, once in 2 decades, they will do the necessary changes. They will also see whether if there is any particular accounting standard required or not required. If it is not required, they will withdraw. If it is not required, then they will withdraw. Or else they will merge this accounting standard with some other accounting standard. For example, there's something called as Accounting Standard 6, where we got the guidance for depreciation, how the depreciation needs to be accounted for, when it should be recorded, how it should be measured, how it should be presented, how it should be disclosed. This was given in Accounting Standard 6. Whereas there's something called as Accounting Standard 10, which dealt with fixed assets. So of late, they felt that instead of having 2 separate AS, why not merge the depreciation concept with AS 10? Hence, they modified, updated AS 10. They updated AS 10. So it became, instead of fixed asset, it became PPE, property, plant, equipment, in which we have given the clarification about how do we go about and do accounting for fixed assets, tangible fixed assets, and how the accounting for depreciation is being done. Therefore, this AS6 was withdrawn. AS6 was withdrawn because it got merged with AS10. So AS6 was withdrawn. Similarly, we had something called as Accounting Standard 8. We had something called as Accounting Standard 8, which taught how to do accounting for research and development. Research and development is basically a intangible asset. It is an intangible asset. When you do any research under research and development, R&D, R&D, when you do any R&D, and out of that R&D, if any intangible asset is emerged, so that intangible asset, how do you record? How do you amortize? That was covered separately in Accounting Standard 8. Then we realized that we already have a standard called as AS26 about intangible asset. This is also one type of intangible asset. So why do you have 2 separate accounting standards? So they merged AS8 with AS26, and therefore AS8 was completely withdrawn. Got it, not got it? Clear or not clear? So wherever required, ASB will update AS, merge AS with other AS, or withdraw the AS wherever required. Got it, not got it? No energy. Got it, not got it? Got it. Now, what is the role of MCA? MCA ka function is, it's a statutory notification and statutory notification and enforcement of AS for companies. This MCA is responsible to notify the AS. It's one of their role. MCA role is very broad. The company law has given a big role for MCA. One such role for them is what? To notify the accounting standard which is issued by ICAI. Now, who has given the authority to MCA? You go and notify like that. Who says it? It is enforced by Companies Act 2013. Companies Act 2013 is created by Parliament. Both the houses of Parliament together, what they do? They pass a bill called as Companies Act 2013 bill. Once the bill has been signed by the president, once the president gives the assent, that bill now becomes act. So in the Companies Act 2013, MCA was empowered, given the power that you will notify the accounting standard and prescribe it to the companies. Got it? Not got it? Okay. Notification. MCA reviews AS recommended by ICAI. So who will recommend AS to MCA? ICAI will recommend the AS to MC, telling that, look boss, we are working with the business entities very closely. So for their problem, this is the accounting solution. For this accounting problem, this is the accounting solution. So please go through and tell me if you want me to do any changes. So MCA will review it. Will they review directly? No. They will give that work to NFRA. NFRA. Who is NFRA? We'll discuss. So MCA reviews the AS recommended by ICAI. And once everything is well, fine, they will notify them. And this is legally applicable. This is legally applicable for all the companies. So MCA reviews AS recommended by ICAI and notifies them legally after consulting with NFRA. And NFRA has got the power of consultation from where? Under section 133 of Companies Act 2013. In this section, the power is given to NFRA to review the standards which is being given to MCA for notification purpose. Now, under which rule or the framework is MCA notifying? Where is MCA notifying this? MCA is notifying this AS under Companies Accounting Standard Rule 2006. Now that 2006 is replaced as 2021. So in Companies Accounting Standard Rule 2021, the normal accounting standard are notified. So if I as a CA or you as a CA want to go and check where this notification is given for accounting standard aptina, you will refer now Companies Accounting Standard Rule 2021. What is the prior rule? Same, but 2006. Whereas you want to see where is the notification given by MCA for Ind AS. For that, the rule book is Companies Indian Accounting Standard Rule 2015. Under this rule book, accounting standard, which accounting standard? Ind AS is being notified. Ind AS is being notified. Got it? Not got it? Will you forget these 2 points? These 2 are very, very important. Companies Accounting Standard Rule 2021 and Companies Indian Accounting Standard Rule 2015. Okay, not okay. High chances that you might get MCQ based on this. Okay, not okay. Okay, not okay. Okay. Implementation and schedule. Today they decided accounting standard to be applied apnina. Was it launched all over the country just like that? No. Whenever any country comes out with any accounting standard, Ind AS or any type of accounting standard, they will implement them gradually in a phased manner. So for example, Ind AS was launched in 2015 only on certain companies. In a phased manner, it was made applicable to other entities. So in one shot, you cannot make it applicable on all of them. Gradually, in a phased manner, you'll make it applicable. So specifies phased implementation based on the type of company, based on what type of company you are, listed, unlisted, based on what type of net worth you have, based on what type of turnover borrowing you have. Accordingly, the accounting standards are implemented on these entities. Okay, not okay? Now comes the role of NFRA. What is the meaning of NFRA? Sorry, what is the full form of NFRA? National Financial Reporting Authority. National Financial Reporting Authority. What is the function of NFRA? There are multiple functions. One such function is to oversight, that is to overlook and monitor the compliance of AS for the companies. The AS or Ind AS, which has been notified by MCA, whether these companies are complying with that AS or not, they monitor. So this NFRA is being established by whom? Who has given the power to NFRA? In section 132 of Companies Act 2013. 132 or 133? I have to check and tell. Okay, let me check and tell. Of Companies Act 2013, the power has been given to NFRA to carry out this function. What is the function? Whatever ICA recommends the AS to the MCA, MCA will only notify it after they consult with NFRA. Regulatory oversight. What is the purpose of NFRA? to ensure compliance with the notified accounting standard. Whatever accounting standard is notified, whether the corporates or the auditor are complying with that AS or not, that is the job of the NFRA to look over. Okay, not okay. There's some authority who is going to do checking work. Whether you're following that properly or not, there's an independent body, independent of ICI. They are not under the influence of ICI. It's an independent body. NFRA is an independent body created by Companies Act. So they are not influenced by ICI. So if ICI is not carrying out audit properly, the companies are not doing accounting properly as per AS or Ind AS, NFRA will report and make necessary action or take necessary actions. Got it, not got it. Scope. Regulates and monitors large listed companies, bank, insurance company, whether they are following AS or not. Audit supervision. They also review auditor and the audit quality of the prescribed class of companies. Whether a particular auditor is carrying out the proper audit procedures for this company or not, that is being looked over by NFRA. They are also into advisory role. Apart from the above work, they are also advising MCA on the matters relating to accounting standard and auditing standards. So there is a lot of auditing standards suggested by ICI, a lot of accounting standards suggested by ICI. Whether these are good, not good, okay, not okay, should they bring any new changes or not, like that, MCA will take the advices from NFRA. Okay, not okay. So ICI is the maker of AS, NFRA is the checker of AS. Okay, not okay. Online people. Fine, not fine. I know it's theory. Konjo, it'll be draining only. This is only one theory chapter. Rest all is going to be practical questions. We can't help because, see, from this I foresee at least a minimum of 2 mark to 4 mark MCQ questions. Every attempt will ask question from this particular chapter, na? No. But when it comes, it'll come for 2 mark or 4 mark, which is a scoring segment, which is a very scoring segment. So for that reason, we have to study this properly. I'm telling you openly. You go nook and corner of any YouTube channel. You go to any nook and corner of any academy. It's my open challenge whether they will take this topic in so much depth as in which I'm taking. I'm telling you, they will not take. You take any videos and see, they will not take this AS topic, this alone. Introduction to AS, not more than 1 hour. Not more than 1 hour. This is our second class. I'll be spending at least 4 hours minimum on this accounting standard. And I'll also be discussing MCQs. So that's very important. You make this chapter very, very strong. So next point is, what is the objective of this accounting standard? All of this is there in your textbook, but the data is too loaded, or it's put in different way, which is difficult for us to process. So I try to put it in a very simplified manner. What is the objective of the accounting standard? Same drama. I want the financial statement to be uniform, understandable, comparable, reliable, transparent, consistent. It should safeguard the interest of the various stakeholders such as investor, creditor, government. Everybody should be comfortable. It should give true and fair picture. It should be compliance with all the laws of the country. That is the objective of AS. If you want me to go through this one by one, I can do it. Very fastly can I go through? First is uniformity and consistency. Now if you have common accounting standard. Accounting standard means what? We are standardizing the accounting procedure. By that virtue, what happens? The financial statement that you prepare for a given set of problem is going to be same. Once you have a common financial statement, comparability becomes easy. Elimination of variations and ensure consistency. That is same accounting treatment for similar items. For similar items, same accounting treatment is being followed. For example, let's talk about provision for doubtful debt. Will any entity create journal entry in different manner for different situations? No. Whether you are creating provision in Reliance Limited or whether I am creating provisions in Tata Limited, everybody is going to come out with same answer, same journal entry. Little bit of things can be here and there. The amount you estimate could be different from the amount I estimate. I may say the provision is required for 10%. You may say no, provision is required for 15%. That variation can happen. That apart, everything else is going to be the same. This will ensure that the financial statement that you prepare across the country is going to be uniform. And this will be prepared in a very consistent manner. Means what? Whatever accounting was done in the previous year, on the same basis, the accounting is done in the second year, third year, fourth year. So all the year, our accounting rules are consistently applied. Therefore, this accounting standard, what has been created, is created in such a way that the person who's reading the financial statement can understand it very easily. Of course, a person coming from the science background, doctors, engineers, who have no idea about ABC of accounting, they can't understand. By understandability, what do we mean? People like you and me who understand accounts, it should be understandable to us. Imagine if the accounting standard is not prepared apna, each one will do accounting in the way they want. Some will create provision, some will not create provision, some will capitalize the asset to the asset account, some will take it to the P&L. Like the differential treatment kudutanga apnina, we will not understand whether it is what basis of accounting they are following. Some is following cash basis, some is following accrual basis. This year I'm following cash basis, next year I'll follow accrual basis. So is it consistent? Is it uniform? No. If it is not consistent, not uniform, I cannot understand only what you're doing. So to ensure my understandability, it's very important to have a accounting standard in place. Present financial information in a way that most people who know the basis of accounting can understand it without much difficulty. This to ensure accounting standard is required. Then comparability. If you have a approved, agreed accounting standard which is followed every year, inter-firm comparison or intra-firm comparison becomes easy. What is intra-firm comparison? Intra comparison means what? I can compare my financial statement of the current year with the previous year or current quarter with the previous quarter. Inter-firm comparison means what? I can compare my financial statement with that of my competitor to see whether he's doing better or I'm doing better. Because basis for preparing the financial statement is more or less same. 99% will be same. Deviation can be 1%. What deviation? He's following SLA method. I'm following WDV method. Like that, few things are here and there different, but more or less everything is same. No, he will also record revenue as per AS 9. I will also record as per AS 9. He will do depreciation as per AS 10. I will also do depreciation as per AS 10. So 99% more or less it will be same. So it becomes very comparable. We can compare the data of that with the other people. Second, the data what is prepared, the financial statement that is prepared and presented to you on the basis of accounting standard becomes more reliable. Because accounting standard has been given by ICAI, which is the premier accounting body in the country who understands the business, who understands the accounting challenges, and they've given a solution to it. So therefore, considering that accounting standard, if you prepare the financial statement, we blindly believe that, okay, this financial statement will be reliable. Why reliability is important? Imagine I want to invest in Reliance Industries. Can I go and check their accounts thoroughly? Not possible. Therefore, I'm an external person. I'm only dependent on the financial statement that has been provided by the company or the auditor. So therefore, if the financial statement what they provide is not reliable aptina, then the money what I invest can go into loss. So therefore, it is very important that the financial statement should be reliable. Second, the financial statement that you prepare on the basis of accounting standard will give you a transparency. How transparency is coming? Through disclosures. A lot of AS will tell you, this information, please disclose it. Why? Because only then the user of the financial statement, when they read this disclosure, they will understand whether to invest in that company or not. Just the journal entry trading P&L balance sheet pota patadu. You also have to give information over and above that, which can influence my decision making. So to make the financial statement more transparent, the accounting standard has worked a lot in the stream. I'm telling you people, there's a huge respect that ICI earned or ASB is earned today. When I look back at AS, no, hats off to these people. The way they have, identified the small problems here and there, the way they have given solution, no, mind blowing. They have given solution to all small matters to an extent where we cannot think, oh shit, for this you gave a solution. And the mari problem for that and all, they've identified and given solutions. You should see the way that they've approached in drafting AS. So beautiful work they've done. Little bit here and there could be plus and minus. Human being at the end of the day, we can have difference of opinion, difference of judgment. But they've done beautiful work in drafting each and every AS. You should appreciate it once you understand the AS in depth. This financial statement that is prepared on the basis of accounting standard will ensure that the stakeholders are protected. Who are the stakeholders? Investors, creditors, and government rely heavily on these financial statements to make the decisions. For example, Reliance is asking, Prathik sir, give me 1 crore worth of raw material. Reliance is asking from me, who am I? I'm the supplier of the raw material. They are asking me to give 1 crore worth of raw materials on credit. I can give, I have no problem. But I don't know whether these entities will be able to repay or not. So I will check the repayment capacity looking at what? Financial data, and the financial analysis such as ratio analysis, cash flow statement I'll analyze, After that, I'll decide whether should I give the goods on credit or not, because it's not small amount, it's big amount, 1 crore it is. So unless and until I do a proper research, I will not give the goods on credit. And for my research, what is the data required? Financial statement. That financial statement which is prepared on the basis of accounting standard. Therefore, when the financial statement is prepared on the basis of accounting standard, it will be presenting a true and fair picture of the company, entity, okay, not okay. Therefore, this accounting standard that you follow in preparing the financial statement will also push you to comply with all the legal and statutory requirements, because all the accounting standard will ensure that you comply with all the legal and statutory requirements. Okay, not okay. They'll push you, they'll motivate you. That is how they will direct you. These are the objectives of accounting standard. Okay, not okay. Accounting standard deals with the following aspect. How many aspects? 4 aspects for preparing financial statement. In 1.3, they're given in page number 1.3. They've given the 4 aspects. One is recognition aspect. What is recognition aspect? Recognition of a transaction or event. What is meaning of transaction? What is the meaning of transaction? Since 11th, I'm discussing this. Transaction means an activity that takes place between 2 people. Activity that takes place between 2 people, in which one is business, another is third party. And that activity is for exchange of goods or service or cash, that is money. Right? So transaction is exchange of goods, service or money or all of them between 2 parties, in which one party is business, another is third party. This is called as transaction, where something is taking place, exchange of something is happening. What is event? In event, is there any exchange happening? No. What is event? Result of transaction is event. So transaction also we have to record, event also we have to record. The example of transaction is what? Goods purchased, goods sold, cash deposited in bank. All these are transactions. What is event? When we record closing stock, no. Recording of closing stock. For that we pass one journal entry. What is the journal entry for closing stock? Trading account debit to, closing stock to trading account. Closing stock to trading account. This, is it a transaction? No, it is a event. So how do we recognize the transaction or events in the books of accounts is being dealt with in recognition aspect. When to record a transaction plus how to record the transaction is being covered in recognition aspect. Once you decide to record a transaction, you need to record the amount for it. So how do I measure the value? That is being dealt with in measurement aspect. So how do I measure the transaction ka value and event ka value? How much should I record? For example, inventory is measured at lower of cost or NRV. That is cost or NRV, whichever is lower. This is how we are trying to measure it. So this has been given under measurement aspect. Then comes presentation aspect. This transaction and event that you've recorded, how do I present this in the financial statement? Whether it should come in trading account or P&L account, or should it go to balance sheet? If it is going to balance sheet, should I show on asset side or should I show on liability side? That presentation is covered under presentation aspect. So how to present the data in the financial statement. Plus, is there any additional disclosure to be given for this transaction and event? There could be certain transaction and event. Recording alone is not sufficient. You have to give additional information to it, where in the notes to accounts. Also, there are certain information where it is not captured in form of transaction event, but still we have to disclose. Such as contingent liability. Contingent liability, it's not a liability, it's not a entry to be recorded, but information of this should be disclosed. And this is being given by whom? Disclosure aspect. So disclosure talks about what information I should disclose in the notes to accounts. Got it, not got it? Any difficulty? No. Can I continue further? What is the status of accounting standard as on today? The Institute of Chartered Accountants of India through ASB has issued a total of 32 accounting standards, right from AS1 to AS32 over a period of so many years. Since 1977, this ASB has issued how much accounting standards? 32 accounting standards. You'll be surprised to know 90% of the CA students don't even know there's something called as accounting standard 30, 31 and 32. 90% people will not know, because everywhere they will tell there are totally 29 accounting standard, In that two standards, which is 6 and 8, is deleted. So from 29, if I minus 2, how much it is? 27. That is how they will tell. Nobody will tell you. In totality, the ICI has issued how many standards? 32 accounting standards. Out of these, AS1 to AS29 were notified by MCA under Companies Accounting Standard Rule 2021, thereby giving them a legal recognition. So AS1 to AS29 was notified by MCA, which means 30, 31, 32 was issued by ICI, but was never notified by MCA. Got it, not got it? So what is AS 30, 31, 32? AS 30, 31, 32 gave us the guidance, gave us the accounting standard relating to financial instruments, which were issued by ICI. So ICI has issued 30, 31, 32 standards, which was recommendatory in nature and not mandatory. So ICI said that if you're dealing with any financial instruments, and if you're having a doubt how to record, how to measure, how to present, how to disclose appadina, you can refer 30, 31, 32. If you want, you can refer. It's not compulsory. It is optional. அப்படின்னு சொல்லியிருக்காங்க. These standards were never notified by MCA, and therefore it did not attain the statutory recognition. So law never recognized this. MCA never recognized this. Subsequently, to avoid confusion and ensure alignment with international practices, these concepts were incorporated into IND AS. So AS 30, 31 and 32, we eliminated from AS and we incorporated under IND AS. Got it, not got it? So for corporates, whether you're following AS or IND AS, if you want to account the financial instrument, you can follow what is given under IND AS. புரிஞ்சுதா? ASல வந்து பாத்தீங்கன்னா 30, 31, 32 is withdrawn. So imagine I am a company on whom accounting standard is applicable. If I have doubt of how to record the financial instruments appadina, I can go and refer 30, 31 and 32. But the problem now it has been withdrawn. So now there is no guideline for it. So guideline for this is given where? In the IND AS. So I can see there and I can take the data if required from there. Is it mandatory for me? Not required. But if I want to refer, I can refer instead of 30, 31, 32, I can refer IND AS for these accounting. Okay, not okay? Because accounting standards are applicable for small companies and big companies. IND AS is applicable for super big companies. They said that this financial instrument, not everybody deal with. So why to put here and confuse everybody? Instead, we'll remove this and put compulsory in the IND AS. So to avoid confusion, because already 29 AS is loaded. On top of that, complicated 3 AS is going to only even complicate your life. So they thought it is better we'll remove it. So ICAI later withdrew 30, 31 and 32. Got it, not got it? During my period, we had studied this. It was later only removed. After which these standards were effectively withdrawn. So 30, 31, 32 is withdrawn. So now, so this is AS 1 to 29 and this is AS 30 to 32. These were issued by ICAI. Was this also issued by ICAI? Yes, issued by ICAI. These were notified by MCA. Did MCA ever notify this? No, these were never notified by MCA. Subsequently, this was withdrawn. So this 30, 31, 32 is no longer a part of your accounting standard. So from 32 accounting standard, if I minus these, what am I left with? 29 accounting standard. Out of this 29 accounting standard, two accounting standards, which is AS6 and AS8 got merged. So AS6 got merged with AS10 and AS8 got merged with AS26. And therefore now, out of 25 AS, if 2 AS is withdrawn or merged, I'm left with 27 accounting standard, which has been notified by MCA. So as on today, how many AS is notified by MCA, which is applicable? 27 accounting standards. The Institute of Chartered Accountants of India so far has issued 29 accounting standards. Here also, they have not spoken about 30, 31, 32. That's why I said 90% of the people will not know this. The Institute of Chartered Accountants of India so far issued 29 accounting standards. However, AS6 has been withdrawn because it was revised. AS10 was revised, so it is merged with AS10. And later, AS8, Research and Development, Accounting on Research and Development, has been withdrawn because it got merged with AS26. Thus, effectively, as on today, there are 27 accounting standards at present. Got it, not got it? It has already been mentioned that accounting standards are developed by ASB of ICAI. The institute not being a legislative body can enforce compliance with its standards only by its members. Now listen to very carefully. They're telling that institute is not a legislative body. It's not a legal body. It's not a law. Only law can enforce people to follow. Is institute a law? Institute is not a law. It's not a legislative body. So whatever accounting standard they are coming out with, it is something which is applicable for members like us to compel or request our clients that please follow. For example, Babu Pani Puri Wala, right? Or you take Agarwal chart, or you take Agra chart. Go and ask them. They'll make good amount of turnover. Their sale per day is nearly about, you know how much? 20,000 to 30,000 rupees is per day sale. Let's say 30,000 is per day sale. In a month, what is the turnover? 30 into 30. 9 lakh rupees is turnover per month. I hope you don't have a change in mindset to go and do Pani Puri business. For a CA's only goal. 9 lakh rupees per month. In a year, how much? 12 into 9. 12 lines are how much? Didn't study? 108, 1 crore, 8 lakh. So in case if you have heart attack, I'll go on lower figure. I can see people literally having gloomy faces. What, yeah? I am studying so hard, thinking that 1 lakh per month I'll earn, 12 lakh rupees, this Babu Pani Puri is earning 1 crore a year? Yes. But I don't want to break your heart. Let me say he is doing a sale of 10,000 rupees per month. Now tell me, what is the turnover? Sorry, 10,000 per day. So what is for a month? 10,000 per day. For 30 days it is 3 lakh. For 1 year, 36 lakh. Now peaceful? Comfortable? Okay. 36 lakh rupees he is doing turnover. In that you minus 50% expenses. What is the balance? 36 by 2, how much? 18 lakhs is his profit. 18 lakh is profit. Still for you it is unbearable Apnina. Minus further 6 lakh expense. And let's say his profit is 12 lakh rupees. Yes or no? Good amount of money. Babu Pani Puri Wala, sole proprietorship concern. Should he follow AS or not? Should he follow AS or not? He has to follow. But go and ask Babu Pani Puri Wala, hey you, are you following accounting standard? First time they will not follow. Then you will ask a question then why the hell we have accounting standard for non-corporates? Because sole proprietorship concern, partnership concern, there's so many entities who don't follow. Then why do we have it? These people will not follow AS maybe today. But one day will come where they have to follow AS. When the same Babu Pani Puri Wala will come to us asking for loan. Loan varma. Loan ke. That time we will tell. We means ICAI, member of ICAI. We will tell. You come with the accounting data as per AS. You come with as per AS. Only then I will sign your report and give. When this gentleman goes to bank for asking bank loan, no. The first thing the banker will ask is a financial statement signed by the auditor. Therefore, he has to come to us now. There is no choice. And when he comes to us, we will ensure that he follows AS. Because on what basis should I sign and give? I don't even know the financial statement that is prepared in the right way or not. On what basis has he recognized his revenue? How he has recorded his expenses? Whether he treated the capital expenditure as revenue or not, I don't know. So unless and until I do a proper checking, I will not give a signed financial statement from my side. There are a lot more things to it. You'll understand gradually. So these people, when they come to us for these kind of things, That is when they will comply with AS. Otherwise, they will not comply. Otherwise, they will not comply. Just because Babu Panipuriwal is not complying with AS, can ICI file a case on them? Can they send notices? No, because ICI is not a legislative body. They are not enforcement body. Income tax department is a part of legislative body. Through law, the income tax department, MCA is all coming. So they have the right to give notices. If you're not complying anything up, Nina, they can give notices. Can you give notices? No. Hence, we are not legislative body. So whatever ASS we come out, no, our member has to apply. We can't enforce them on the clients. We can only request them. We can't enforce it. Also, the standards cannot override laws and local regulations. Correct? No. When ASB is formulating this AS, they can never override the country ka law and the local regulations. The ASs are nevertheless made mandatory from dates specified in the respective standard. In every standard, they will mention that this AS is recommendatory or mandatory from which date. And these are applicable for enterprise. Leave it. The company had earlier notified 28 accounting standards and mandated the corporate entities to comply with the provisions stated therein. However, in 2016, the MCA withdrew AS6. And now there are only 27 accounting standards which is notified where in companies accounting standard rule 2021. So if anybody asks you how many standards is notified by MCA as on today, what will you say? 27 accounting standards. In total, how many accounting standards were issued by ICI? 32 accounting standards, of which AS1 to 29 was notified by MCA. Subsequently, AS6 and AS8 were withdrawn and merged with the other accounting standards, thereby leaving a 27 accounting standards notified by MCA. However, AS 30, 31 and 32, which is issued by ICI, never got the legal recognition by MCA, and later ICI itself has withdrawn that standards and they merged it where? In Ind AS. In Ind AS they have been dealing with. So far clear or not clear? Online people, so far clear or not clear? This is about accounting standard. This is about accounting standard. Now, if you want, I can give you a break of few minutes, or we can wind up the session here and start Ind AS in the next class. So we'll take probably, let's say 1 hour or let's say 45 minutes to complete Ind AS. Immediately after that, what I'm thinking is I'll do a revision, full revision and MCQ, because 1 month prior to exam, you may have doubts in this and you will not have the time to go through the entire class, a regular class, but revisions you'll go through. So what I'm thinking is next class, we'll take, let's say, half an hour to 40 minutes to complete this AS. Immediately after that, I'll give you a break and then I'll take in total 45 minutes to recap this entire accounting, that is this entire chapter, with MCQ given in the ICA module plus my own 30 MCQs. So this will ensure that in 45 minutes, your entire accounting standard revision is done at least 1 month before the examination. Is that sounding good? I can take this for half an hour, 40 minutes, but I don't want to overload too much. We just started, no? வச்சு செய்யணும். ஒரே ஷாட்ல செஞ்சா அப்புறம் ஆள் அப்படியே போட்டுக்கிட்டு போயிடும். வச்சு செய்யணும். So can I stop here? Or you have the motivation to do next 1 hour? No motivation? Oh my God. This no sir. இப்போ okay. Starting stage, no? விட்டு பிடிப்பேன். After 1 week, 1 month, 2 months, I'll ask the same question. Can we do extra 1 hour class? The answer should be yes. Okay, chalo. All in people, all set. Can we wind up? Fantastic. So guys, that's all from my side for today's session, people. I'll see you all in the next class, which is on Thursday, 5:15 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you, people. Thank you.